All right, so the world's hottest market, the hottest stock market in the world, suddenly has become the most vulnerable. It was hammered on Monday and just absolutely annihilated Tuesday, and then they halted the thing. I want to bring in now Main Street Research, their Chief Investment Officer, James Demmert. And James, South Korea, the Korean market, we've got it up here. I mean, this right here has just been a pure juggernaut. You go from 50 to 150 in the blink of an eye. So it's a small pullback in the grand scheme of things, but the suddenness of it, it's caught a lot of people flat-footed. What's going on?
Yeah, a lot of fear here, and they halt the market. You know, looking back in history, times when they halt markets is often bottoms. So I think investors want to be careful here about running away when they might want to run towards. You know, one of the things that this index is, or this fund is really driven by is Samsung. If you think memory is going to be have any longevity,
really, it's three stocks. I mean,
it's really three stocks.
Right.
Yeah, and we're big fans of Samsung at 8 times earnings.
Right.
You know, as of today's decline. So that halting, we would suggest when that opens up, don't be shy, take a position.
All right, now let's talk globally because you've done very well for your clients because you've shifted and you got some, you've been over-indexed to global stock markets. And you say it's sort of a new world order. These countries, particularly in Europe, they have to spend more fiscally. They got to spend for their own defense. They've got accommodative central banks, and the valuations are cheap. Let's start with the fiscal spending. Is this sustainable?
Well, you know, I think it is because the government, U.S. government defunded these countries, so they have to turn on the fiscal spending, and that's not going to go away, and we're not coming back. So we would suggest that's years long, not months, and that's one of the driving forces of why we've been foreign advocates for so long.
Accommodative central banks, so you anticipate more ECB cutting?
Yeah, for sure. You know, in this turmoil in the Mideast is even going to have them lean more into cutting rates. So you've got really good fiscal and monetary setup.
Sometimes people tell me a stock is cheap, and I say, well, it's cheap for a reason. Sometimes cheap is you're supposed to be cheap, but in this case, you think cheap is an opportunity.
Yeah, I think the Euro stocks, the Japanese stocks were cheap for the wrong reasons for years.
Right.
But now you have this double-barrel fiscal monetary policy. You combine that with really ridiculously low valuations. I mean, it's half the price, 50% discount to U.S. stocks, and balance sheets that look really fantastic. We think there's going to be a big FOMO trade, trillions going to foreign markets as they continue to see them outperform the U.S.
Yeah, well, you know, there's been a lot of chasing, and that's been one of the areas, to your point. I don't know anyone from Wall Street in the last 6 months who has to say they want more exposure outside the U.S. Let's talk individual names. Now, you've already mentioned Samsung. I think their books are for the next 2 or 3 years, right? They just jack prices up 100%. They've got pricing power. This memory thing wasn't well thought out, but they just happen to be in the driver's seat. HK Hynix, but Samsung and Siemens, right? What would you equate Siemens to? Like, would there be a European version of GE?
Yeah, the old GE.
The old GE.
Yeah, Siemens, super diversified. You know, they spun off the Siemens Energy, which, by the way, you want to own as well. But Siemens trading at 12 times earnings, it's a great way to play this economic revival going across not just Europe, but also Japan and Asia and in the US as well.
Right. Well, let's talk about Japan. I mean, listen, Latin America's killing it, Japan is killing it, and I think part of it has been the election results. They've elected pro-growth, you know, folks who are out there say, we're going to grow our economy. Japan, they've been wanting this for a long time. But what is Mitsubishi Motors? Because in this country, you mentioned Mitsubishi. I don't know the last time I saw Mitsubishi. I know it's a global company, but I don't remember the last time I even saw a Mitsubishi.
Yeah, that's true. You know, there's a bunch of Mitsubishis, and the motor company is what you want to own when you see a reacceleration of economic growth. You know, overseas in Japan, the inflation has been basically non-existent. Now it's 3%. So that means the economy's picking up. The prime minister's basically taking a play.
They're running it hot.
Yeah, they're running like the U.S. did a few years ago. And the autos soar when you have cyclical strength in economic growth.
All right, and of course, you've been bullish on our markets for a long time too, particularly technology. You like Broadcom. Broadcom could do no wrong for a long time, and now it's starting to just slip a little bit. You know, hit 400, now it's at 320. It's broke through the 50-day moving average. Now it's resting right on the 200-day. I think they report soon, right? Tonight. So they report soon. This is a moment of truth, right? I mean, this is a stock that's primed for a monster move one way or the other.
You know, Broadcom, we think it's an NVIDIA story. It's going to be a replay. They're going to, so numbers that are going to beat expectations, we think they're going to guide higher. But investors have gotten very impatient with this trading range. And I would remind them, Everybody was afraid of a bubble. Now the air has been let out. That's going to give these stocks another run. And we'd say by the balance of the year, this thing goes way higher, and it takes all the hardware plays with it.
Takes 400 out. It goes
Takes
much
the
higher.
400 out, and it's a hardware story still, Charles, right? It's not the software. Stick with the hardware, and this is one of the best.
Full disclosure, I've got subscribers in it. I think it's in a sweet spot as well. Looking good there, my man. Take it easy, James.